It's 9 a.m. in Hong Kong and Singapore, 10 a.m. in Tokyo. Markets in Greater China are shut, of course, but you are watching The China Show, and I'm Annabelle Drawlers with David Ingles.
Good morning. Let's get to your top stories today. Japanese stocks are rallying for a second day following Takaichi's election, of course, as the next prime minister. Asian shares are also catching a bit of a tailwind, is an understatement. They're coming out of that AMD deal with OpenAI.
Yeah, and on that front, we're going to be hearing from executives of both companies, with AMD taking a high-stakes chance to challenge NVIDIA's lead in the AI computing industry.
Also ahead, gold pushing closer to $4,000 an ounce here as the U.S. government shutdown and the French political crisis sparking fresh market uncertainty.
And President Trump flags potential talks with Democrats on healthcare subsidies to resolve the shutdown impasse. Starting the show with some breaking news this morning. We've actually just had the Philippine CPI figures crossing the terminal here this morning. It's come in softer than what the estimate was, so rising 1.7% on the year for September. The estimate had been for 1.9, but it is actually a hastening from the month prior because it was at 1.5% in that period as well. The Philippine peso, I mean, it's not really changing too much so far.
Yeah, we'll have a closer look at the charts later on as it pertains to the peso, and certainly as we were highlighting this week, inflation is actually it's a blessing right now given the other more dominant negative issues hounding these markets. Speaking of, let's just have a look at how we're poised as we go into the thick of Tuesday's session here. As we were pointing out, of course, a couple of markets are shut today. Mainland China, you don't have Hong Kong, and you also don't have South Korea coming online today. All that being said, we are not short of market-moving stories. We'll get into the AMD story in a moment there, and that massive move from overnight into where we are. And really, I think if you think about these two market themes, the AI story is more than offsetting the return of the dollar. Really, that's down to what's happening over in Europe, and we talked about the weakness that we're seeing in the Japanese currency. Speaking of AI, right? So Taiwan, flip the page, please, if we can. And the chip stocks have played there, and also worth mentioning that Honhai is also obviously an NVIDIA play, but also reacting to the first time on that sales number coming out. So out of the gates, TSMC is up 2%. Honhai is up as well. Japanese plays are also seeing some upside there. Over to Europe right now, with it blowout in spreads, the highest going back to the very start of 2025. Oat futures are online as we speak, still coming under pressure, as with the euro. We'll talk about these charts in a moment, right? So we're talking about the weekly top on the cloud as far as the Japanese yen is concerned. That's trading at about 150, 70-ish and change. That's where effectively we should be looking at there. If you're looking specifically at a point in time, it's the high from August 1 on dollar yen. Right, gold. 4,000, talked about that. The gold play over in Australia. Silver, and of course, where you are as far as the oil market is concerned. So we're close. We're $17 away in the most active contract as far as the futures market is concerned. And again, a reminder, several markets are shut, Greater China and also South Korea, which would have been likely trading up. I will bet my unhealthy liver on that, given, of course, this AI play and, of course, that AI representation in that market, Belle.
Yeah, absolutely. I mean, they're certainly going to be playing catch-up when they come back online, but it is very much the story being dominated by tech this morning, and for good reason. It's a huge, huge deal that's been signed between OpenAI and AMD. So you just want to set the context of this. OpenAI is looking to deploy 6 gigawatts worth of AMD GPU units, over multiple years. So 6 gigawatts, you sort of put that in the context of the recent deal you had between OpenAI and NVIDIA. That was for 10 gigawatts. So you actually are, you're just over half of that, but it is very significant in size. And you saw that reflected in the share price of AMD as well. Yeah,
20+% overnight. These are all, let me use a plural version of that, all coming at a time when there are questions around the valuations here, and you are getting a lot more on that as well. It begs the question now in terms of the size of data centers and who the winners are is this a challenge to hyperscalers, I think?
I think you can certainly interpret it in that way. I mean, so far, if you take a look at the AI infrastructure build out, it has been led by the hyperscalers. So you're talking names like Amazon, Microsoft, Google as well. But now it seems to be that OpenAI actually wants to become a hyperscaler themselves. That's sort of what the shift seems to be, which is why you're seeing it signing these deals with the likes of NVIDIA, AMD. So they're sort of also just trying to diversify where their bets are coming from. But I think it's really interesting that you mention the sort of valuations that we see in this space as well, because that is the big risk right now, that it's sort of just excess capacity, resource misallocation as well, that we actually haven't really seen getting that full ROI yet. But it is something that Sam Altman talked about overnight as well. Yeah,
he did. When it comes from someone, of course, within the industry itself, it certainly begs more attention to that. And to the point you're making, right, so what analysts are saying, yes, valuations are looking stretched, but they're also at the same time raising their price target. So they themselves are also catching up to the short-term re-rating of this as well. In fact, let's have a listen to all the commentary around the key stakeholders on this big story. Have a listen.
Today, 4 million developers have built with OpenAI. More than 800 people use ChatGPT every week, and we process over 6 billion tokens per minute on the API. Thanks to all of you. AI has gone from something people play with to something people build with every day.
I have full confidence in OpenAI, Sam, Greg, Sarah. I mean, this is a massive opportunity for us. Right now, right here, it's about who has the most compute and how fast can we get it online. And we're committing to doing this together.
We now have an ability for enterprises to build agents in a much more visual, much more intuitive way. You've heard us say 2025 has been the year of agents. We think that's true. Codex has been a great example for us of that. Our coding agent now available through an API also.
The lead time to make software is a lot shorter.
It's gotten a lot shorter. I think you saw today we live demoed, I think 3 or 4 different things that we've built in real time. We expect that to continue to be the trend.
So I think it's really great that Lisa Su there from AMD also referenced the scale of the opportunity, because you think about AI data centers. I mean, right now, today, it's around $250 billion market, rather. But by the end of the decade, I mean, everyone's looking at it to become a $1 trillion market instead. So we just heard from Bloomberg Intelligence earlier, for instance, talking about where does this leave AMD in this space? And so right now...
In the race
well, in their share of the total AI data center market. Okay. And they're in the low single digits right now. But actually, if they can totally fulfill these commitments to OpenAI, they're looking to take up to a 20% stake in the AI data center market. So it becomes very significant for the company.
Well, a bigger share in what is now increasingly looking like a bigger pie as well. So it's not like they're taking it from some of their peers on the street. Just some of the analyst reactions on this overnight. So we talked about Jefferies and the price target now at 300 on AMD. Barclays is coming out as well with some commentary here. Prove the ecosystem is desperate for more compute, to the very point that Bell just made just now. Webush, sharp upward move in the stock is more than justified. So how do we wrap our heads around one story after the other? And the fact that when you look at some of the technicals on this, I mean, is it even worth at this point in time worrying about technicals, given that, you know what, this is not a short-term story. In fact, this might not even have to do with anything around short-term cyclicals in this economy. In other words, what I'm trying to say is, do we need to be worried about the Fed on the AI story? Maybe not, because those are two separate things. The Fed is a short-term conversation. The AI, which seems to be driving the markets almost purely, is a longer-term consideration. And I think markets tend to confuse these two themes a lot more. But, I mean, at some point, we'll need to see some rotation out right here, because this momentum is really, really strong. In fact, let's get a take right now from Mark Cranfield. Let's bring him in. He's been patiently waiting as we were just trying to set a scene for him right now. Mark, good morning. Thank you for joining us. I mean, I look at a move of, let's call it 25% on a stock that is so widely held already like AMD. What else is there, beyond the AI play, or is AI play enough currently to drive this market even further?
Yeah, while I was waiting, the AI bubble got even bigger, and it's getting bigger by the minute. But nobody wants to call the end of the bubble. And the earnings season coming up in the US, which has just started, but the big names haven't put their numbers forward yet, will be very significant in this. Because obviously, in the end, what investors want to see is that all this AI promise actually translates into hard numbers in terms of profitability. Now, at the moment, the signs are pretty good. We've just had Hon Hai over the weekend, who's a key supplier to NVIDIA, produce very good numbers, much better than expected. So that sets up nicely the US earnings seasons, because people will now be expecting they will see something similar from these large American companies who are tied up with people in Asia as well. So it looks as though we're going to get through this quarterly earnings season. Mostly, it's going to be a good season. It will keep the momentum going in US markets and global markets. And so people can defer the risk that this bubble is suddenly going to deflate and hurt equities across the board. The risks are getting, obviously, the longer it goes on, the bigger the risk for the first quarter of 2026. And by then, people are really starting to get a little bit nervous. But in the short term, as you say, even the Federal Reserve is being pushed to one side. At one point, we were very desperate for interest rate cuts from the Federal Reserve to keep the momentum going. Even that's not such an issue now. It's really now all about companies delivering, producing good numbers when they report in the next few weeks. And if you take Hon Hai as an example, things are looking pretty decent. People will be optimistic about it.
Yeah, and actually we can just see Hon Hai there coming back online after that long weekend, but up 1.1% after we had those monthly sales figures capping off the last 3 months. But what do you make then of the move that we see in gold in particular? Because it's obviously a haven play. It's pushing ahead toward 4,000. Does that tell you that there's still some nervousness around the levels we're seeing today?
It does. Obviously, the geopolitical risks, the fact that the US shutdown could go on for longer. It could be, I think the longest one is about 5 weeks. People are suggesting it could be something similar to that. All of those factors. There isn't a very strong currency around. Gold always does well when people are disputing whether or not other currencies are really havens or not. The yen was beginning to look like a haven for a little while. And of course, this week, thanks to Takaichi, has completely upset the yen. French problems are undermining the euro. The US dollar was already starting to wane anyway, and we've seen it in the reserve data. The US share is not as big as a sovereign wealth currency as it was before. It's still the biggest, but not as much as it was. So all the major currencies, to one extent or another, are all seeing their value eroded to some degree. That's all beneficial to gold and silver by implication as well. But just like the AI bubble, there is certainly a risk that we're seeing one in the precious metals now as well. And the chances are that they will come together about the same time. We're building up to some kind of a scenario like we saw in 2008, when everybody was concerned that everything was what they described as trading to one. The convexity of all these positions was so similar that when one breaks, they all break. So if we see a sudden reversal in tech stocks, that will probably lead to reversal in gold, and it will lead to reversal in other things as well. Anywhere where positioning has built up very large is all at risk. If one of them goes, they all go.
All right, Mark, looks like I need to get on Elon Musk's shuttle to Mars in that scenario. Mark, on the relative sort of comparison within the FX space, because you mentioned, of course, gold seems to be standing out because of nothing else seems to look good. We went into this week with, at least in my head, US shutdown and a weak dollar, and then Europe and Japan happened. Do we need to live with a stronger dollar slightly longer than expected, Mark?
Yeah, it probably goes a little bit further. I mean, thanks to the yen, especially. The yen is obviously the key driver in this. You've got such a large currency. When dollar yen jumps 2% and more, obviously that has a cross-border impact for all the other markets as well. That's helping support the US dollar at the margin. But unless the Federal Reserve suddenly turns very hawkish, the dollar's probably not going to go very far. I mean, it can rise modestly, but we're not going to see a huge rally in the American currency until we get some serious pushback from the central bank in the US saying that we're not going to be lowering interest rates, and nobody really expects that. I think there's too much is built into the fact that lower interest rates, more cuts are coming. The Federal Reserve will deliver on that. So that will pull the dollar back every time it starts to go forward. And don't forget, the way things are going, the yen on a trade-weighted basis, the Japanese yen is close to record lows. And the last time we saw that was in December 2024, and that's when we saw severe verbal intervention, soon followed by a Bank of Japan interest rate hike, and everything turned around. We're getting back into the territory where the Japanese authorities will be getting pretty uncomfortable about the yen. Even though dollar yen hasn't reached the 160 kind of area, it's lost ground against so many currencies. Overall, the Japanese currency is very weak.
Mark, thank you. Mark Cranfield in Singapore there for us out of our MLive team. Coming up here on shows, traders are bracing for this 30-year bond auction. Speaking of Japan, as the election there, of course, of Takaichi. The LDP leader continues to move these markets. Details later on in the show.
And with politics moving markets from Tokyo to Paris, Brandywine Global joins us next to talk market strategy. And a reminder, of course, markets in Hong Kong, mainland China is shut, but you are still watching the China show, so we'll have plenty more ahead. This is Bloomberg.
Welcome back. We're mixed across the Treasury curve. As you can see, we're slightly on the steeper side of things. Of course, there's also a separate blowout conversation on Bund oat spreads in Europe, highest for the year. Oats are coming up on your screens. We're trading right now to the downside here in the Asia-Pacific. Joining us now is Tracy Chen, portfolio manager at Brandywine Global, joining us out of Philly. Tracy, good morning from the Asia-Pacific. Thank you for joining us in this day of age of shutdowns and concerns over budget deficits, a global equity bull market, which we can get to implications a bit later on. What are your biggest conviction calls right now within your strategies?
I think we are still underweight US dollar, and also we still like Japanese yen, and at the same time we still like EM, especially LATAM.
And let's talk about the direction of the Japanese yen then, because we have, of course, seen it sitting around that 150 mark. Do you see that being a sustained reaction in the currency?
I think there's definitely some more room to sell off, but at the same time, I think that this might be an overreaction. So on the first day of the victory of the election, I think the market overreact. I don't think. I don't think the new prime minister will actually deliver the expansionary fiscal policy or very accommodative monetary policy as people expected, because she actually softened her tone. And at the same time, if you look at the interest rate differential of the Japanese yen versus US dollar, I think the fair value should be around 142 or 143. So I think it's probably a kind of market overreaction.
Okay, and so Tracy, what does that mean then for this trade that's been very popular and profitable, which is shorting JGBs, particularly the long end this year? Do you think that trade, shorting the JGB space, continues to make sense, or would you take the other side of that trade?
I think JGB is definitely the anchor of global bond market, especially the developed countries' bond market. I think if this new prime minister she wants to do more fiscal easing and the inflation will continue to go higher, I think the long end potentially have more room to sell off. And at the same time, you see the curve steepening, and the correlation among all developed bond market are actually relatively high. So you see even the US bond market, you see bear steepening as well. So I think it might not be the right time to long JGB yet. There's still more room for them to sell off, and the curve steepening.
Well, and to your point, I mean, we've seen the 30-year bond yield, for instance, rising to a fresh record this morning. But what's been interesting, at the same time, you've seen the sort of gyrations, particularly at the longer end of the curve in Japan. Actually, treasuries and expected volatility has been at its lowest level in around 4 years. That's sort of being attributed to the government shutdown. But do you see that staying the course? And what's your expectation of where trading activity goes from here?
for the U.S. bond market, I think we have seen the curve steepening actually have some kind of a reversal in late September and beginning of October until this victory of Takaichi-san. So the curve steepening, we might start to see the curve steepening again. But at the same time, you see a lot of exciting development on the AI front. So the hope is for the AI development to boost the productivity. And if the productivity goes higher in the U.S., I think the inflationary pressure will be more mitigated. And then the long end should have some support. And at the same time, you still have Treasury Secretary Scott Bessent. He has a lot of tool to use to manage the yield curve, right? He can front load the T-bill issuance rather than issuing the long end. So there's definitely some floor to the long end, and we still see there's some value in the long end. But at the same time, the volatility is coming back because of this JGB development.
Tracy, thanks very much, and please do stay with us because we still want to get your outlook on what's happening in China's debt space as well. So we'll go back to Tracy Chen in just a few minutes. But for now, that's Tracy Chen, Portfolio Manager at Brandywine Global, staying with us. We'll have plenty more ahead. That is the market picture, very much an AI-dominated story today because you had a huge deal being signed between OpenAI and AMD to supply GPUs. But we'll have plenty more ahead. This is Bloomberg. Some of the stories we're following today, and President Trump says he would negotiate with Democrats over healthcare subsidies in a bid to resolve the U.S. government shutdown. The Senate has rejected for a fifth time a House-passed stopgap bill to keep the government open through November 21st. Democrats say they won't support the bill unless it addresses subsidies set to expire at the end of the year. After that vote, President Trump used a Truth Social post to blame Democrats for the impasse, while indicating he'd be open to talks after the government reopened.
We have a negotiation going on right now with the Democrats that could lead to very good things. And I'm talking about good things with regard to health care.
The White House AI chief David Sachs says it's essential for the U.S. to dominate in AI, defending the Trump administration's approach to China. Speaking to Bloomberg, Sachs stood by the decision to let NVIDIA and AMD sell less advanced AI chips to China.
We need to be pro-innovation, we need to be pro-infrastructure and pro-energy, and we need to be pro-export so that the American technology stack dominates the world.
All right, we should be looking ahead to the opening bell, but of course, mainland China remains shut, as with Hong Kong. South Korea is also shut today, so a lot of volumes off the table today. There is plenty more ahead here on Show Stow. This is The China Show. Good morning. Right, welcome back. A reminder, the markets here in Hong Kong are shut. It's the day after the mid-autumn, so our very best to you and your family and your friends. And while that is the holiday today, it does feel like we're in the thick of summer. If you step outside, you don't need to go to Burning Man. All you have to do is step outside. We have one version of that here in many parts of Southeast Asia today. Speaking of burning and red hot, these equity markets continue to feel the fuel from this AI frenzy that's taking place. SOX index overnight up over 2%. We talked about the AMD story. It's playing out as far as Taiwan, which is reopening, of course, today. The bond story, of course, well, two things is one, the shutdown. You have Europe that's taking place. We'll get to that in a moment. And, of course, what's taking place in mainland China, where once we reopen from this long holiday, we get into the thick of things where you have the activity numbers, and eventually we'll talk about the inflation prints coming through out of mainland China. On that note, let's bring in Tracy Chen. She's still with us, portfolio manager at Brandywine Global, and joining us out of the United States. Tracy, thanks for sticking around. I want to ask you about what's going on in the CGB space. So effectively, the 10-year yield, relatively speaking, has had to your point, right, a biggish move, right, from 1.6. I think we're now at 1.9%. Is that future inflation being priced? Because so far the data doesn't seem to be pointing to inflation coming through the system, or is that simply money going into the AI plays in the equity space, Tracy?
Yes, I think there are several factors. There's definitely technical factor, the rotation of the money from the bond market to the equity market. That's number one. Number two is there is some the removal of the exemption of the tax on the bond purchase. I think that's another factor. You see some mutual fund or banks that are selling the CGB, and thirdly, does that mean that we have seen the worst of deflation, where the deflationary pressure, the worst of it is behind us. And at the same time, we see the industrial profit actually jumped double-digit in the month of August. So I think that's a good sign. Inflation profit correlates very closely with PPI. So I think for the next month, we are hopeful to see PPI improve a little bit, but CPI are still, the CPI still have some seasonal factors. So that's hard to predict, but I think PPI should improve. And you see the commodity boom, the metals and also the precious metals, they all rally hard. So I think PPI should improve going forward. And probably we are in the bottoming process of the deflationary pressure in China. And the re-rating of China's equity market also tells you a lot, right? It's not just the AI story. It's entire re-rating of the risk market in China. And you see the RMB also rallies nicely. And what I also want to highlight is the export growth in China is pretty healthy, actually. The trade surplus has exceeded 1.2 trillion. That's a big number. That's a great support for RMB outlook. And if China wants to achieve the self-efficiency in the computer chips, I think China import about 500 billion computer chips from the U.S. If they can achieve self-sufficiency, I think that's another boost to the trade surplus going forward.
Tracy, again, thank you for that. For all those factors. Then does that then mean? Do you think we get to 2% on the 10-year yield? And how do I need to be thinking about? I don't want to call it intervention risk, but the resumption of bond buying in the CGB market. How are you looking at that issue specifically?
Yeah, I think that's highly likely. I don't think PBOC wants to see the 10-year go above 2. I think they have to ensure the funding costs to stay low. They have just too much debt, right? Local government debt and also corporate debt. I don't think they can afford for the CGB yield to go too much higher from here. So I think they probably can resume bond purchase if the yield go too much higher from here.
Tracy, what do you make about what's happening in France right now? Of course, the resignation of the Prime Minister, Le Cornu, it was certainly shocked many. Some are comparing this to a Liz Truss moment for France. Maybe we're not quite at that point, but certainly when do you see this political crisis becoming an economic one for the country?
It's so interesting that this time around we are seeing the peripheral countries are doing well, whereas the core European countries are not doing that well. So it raised the question whether France is governable. And this prime minister has the shortest tenure, right? And I think Macron is in a very difficult situation now. He can either appoint another prime minister and then just invoke the Article 49.3, and at the same time, he can call another snap election, or he can just resign. But I think the political turmoil make investors really nervous about this the fiscal problem, right? I don't think they can reach agreement on fiscal budget for 2026 by the end of this year. So I think the bond curve probably continue to bear steepen, but at the same time, the reaction function of ECB, like Christine Lagarde, I think she will keep a floor on euro currency, and at the same time, they can always buy more bond. So I think the bond yield probably has a ceiling going forward. But you do see the French spread to German bond widen quite a lot. And German bond also sold off as well. It's not like safe haven anymore. And I heard your discussion about gold. I think gold serves as a true safe haven. The government bond is less of a haven right now.
Yeah, as you say, three choices facing Macron, and none of them really look palatable to him probably right now. But that was Tracy Chen there. Thanks so much for joining us, Portfolio Manager at Brandywine Global. And let's turn to another country, of course, that's seen a lot of political moves recently. That's Japan, and the new leader of the ruling party, Sanae Takaichi, announcing key cabinet posts as she seems to reassure markets and her party. Let's get more from our East Asia government editor, John Herskovitz. So, John, what have we learned so far from these Takaichi appointments, and what could be gleaned from them as well?
Sure. What we've seen is appointments to the ruling LDP, and we've seen some really influential power brokers with a lot of experience move into top posts. This includes Taro Aso, a former prime minister who's served in a number of posts, taking over the vice leadership. We also see Suzuki moving into a top post, which really dictates Ministry of Finance influence in what's going to be a part of her administration. And Kobayashi moving in as well shows economic security. So these appointments show that Takaichi is interested in trying to preserve party unity, and at the same time she's trying to reassure markets that there will be stability, experience in the leadership of the ruling party as she goes forward, tries to win the prime ministership race in the parliament, and then forms a new government.
And John, speaking of forming this new government, what challenges could she likely face as she tries to sort of embark on that endeavor?
Sure. I mean, the key thing is getting the LDP back together. It's in the minority position in the two houses of parliament. She's going to need the help of opposition groups to win the prime ministership, which she should get. But that also means making concessions which may not be palatable to people in her party. One of the things is some of the opposition parties have been looking at sales tax cuts. By appointing these people into senior LDP positions, it kind of indicates that this is maybe off the table. Apart from the internal politics, there are huge international challenges that are going to face her right out of the gate. She has an ASEAN trip where she'll meet world leaders. President Trump is coming to Japan. This will be one of the key tests for her. Just a few weeks into office, there's the trade dispute going on with the U.S., trying to get that trade deal enacted. And also there are concerns about security and where things are going to go with the relationship. Having Trump in your country with only about 2 weeks in government is going to be a huge challenge for her. And then there's reassuring people in the region.
John, thank you so much. John Herskovitz there in Tokyo for us. Almost now want to preview that story, Trump and Takaichi. The market implication is certainly a Nikkei that 50,000. Who would have thought, right? This rotation probably might mean that this relative underperformance on the part of Japan relative to what we're seeing elsewhere in the region could actually change as more global money comes back into this market. Let's bring in Abhishek Vishnoi out of Singapore for us, our senior Asia equities reporter. Abhishek, fantastic piece. Take us through the thinking here. What does this mean for not just Japan, but sort of other markets that have outperformed Japan?
So, Japan has been doing as good as well. It has been getting a lot of allocation. But what Takaichi coming into equation has changed is the hue and backdrop. Her pro, stimulus stance and, comfort with the lower amount of number of rate hikes essentially means that Japan can become a preferred bet in Asia and maybe even in developed markets to some extent, given the political instability that we are seeing in Europe at the moment. So we are not saying that other Asian markets, especially something like Taiwan, Korea, or China, would stop winning money. It's just that Japan would get more. Japan would get the biggest share of money that is now going to get allocated. That's the expectation from a lot of investors who are, very quickly pricing in that there would be a lot more fiscal stimulus that will come in. There would be a delay in rate hikes, and that would mean yen would weaken, and Japanese stocks would prosper. Now, this is coming in the backdrop of Japan stocks being relatively cheap than many of other developed markets like US. Especially Japan's AI story is yet to be discovered as nicely as we have seen in China, we have seen in the US. So these things coupled with this new backdrop means that Japanese stocks can become sort of a core bet for someone who was looking to allocate to North Asia as a block.
Yeah, so Abhishek, is this fast money or short-term investors that are going to be moving in, or are we talking about long-term institutional investors? Because you talk about that AI theme, and certainly it's a lot more pronounced in markets like Taiwan or South Korea, for instance.
Well, it is fast money. It is the start of this cycle, the start of this trade. It has to be fast money. I'll not call it dumb money. It may be smart money. But for the long-term structural money to come in, I mean, they'd like to see how Takaichi sort of navigates the political landscape, how, she is able to, work around the parliament and get these bold stimulus measures approved, how much of that comes into being. So as, people see more of that, long-term structural money would get a lot more comfortable in that. But Japan already is doing a lot. It is possibly the best bet in terms of structural corporate reforms, and Takaichi's possible win or possible prime ministership is actually going to burnish that case, the bull case for Japanese assets. So Japan has sort of attracted about $18 billion in terms of money coming in from foreign investors to its cash equities, and Korea and Taiwan have also received a lot of money, but Japan is a far bigger market. So as a percentage of that market cap, still very small amount. And from what we are getting, the assessment is that as long-term money becomes a lot more comfortable with this story, this new story, then we can see possibly multiples of this number that we're talking about in terms of year-to-date inflows.
Yeah, and we're seeing the Nikkei into a fourth day of gains. That's Bloomberg's Abhishek Vishnoi there in Singapore. We'll have plenty more ahead. This is Bloomberg. Well, the OpenAI COO, Brad Lightcap, says the company's incredibly constrained in its compute power, and deals like the one with AMD will help it build out more capacity. He also told us about the importance of investing ahead to keep pace with demand.
We are tremendously compute constrained. It feels like we're in this kind of recurring theme of being compute constrained, and I think the reason for that is the answer to the question you asked, which is demand.
Right.
We see there are multiples of demand that are latent and untapped from what we have today, and even today, obviously, by any standard, demand and revenue growth has been torrid in its pace. And so really we have to invest ahead of that. And I think that's going to be the rate limiter for us to be able to go capture demand, whether it's consumer or enterprise, and for us to be able to build new models, parallelize more experiences, more product experiences, and then enable users specifically to be able to use those products more actively in their daily life, at work, and at home. And so, even things like Sora, the app we just launched, we wish we could invite more people onto it now, but we just need more compute. So the AMD deal, we're excited about being, directionally a way for us to do that.
I've got to ask about the report that OpenAI closed secondary or the ability for employees to sell shares at a $500 billion valuation. I already asked you this question, but what is the metric we're supposed to judge your success by? The $500 billion valuation, the 6 billion tokens per minute? To you, Brad, what is it?
For me, it's actually kind of a metric that we talked about is tokens. It's you mentioned 6 billion tokens per minute on our API. That is the purest, for me, the kind of essence of utility is that consumption metric. And so we've actively tracked that metric to see how people's consumption of AI is growing over time. And you see this happen in amazing ways. So things like Codex, for example, we've seen grow 10x since August, purely on consumption of tokens around coding. And you start to see that same pattern emerge across multiple lanes of use and across multiple areas of work. And that's the metric I look at, because if that number is going up, it means people are using us for more things, and that's the ultimate goal.
Right. That was Ed Ludlow there, of course, with the OpenAI COO, which, of course, all the news flow overnight is leading to what you're seeing on your screens right now. And really, almost on a daily basis, our folks here in the newsroom and our analysts are having to deal with the implications of all the news flow that's come through. In fact, for a look at what all of this means for the region, let's bring in our Bloomberg Intelligence senior analyst, Masahiro Wakasugi in Tokyo for us, who, again, almost on a daily basis has to look at the news flow and has to figure out what this means. Masahiro, can I put that question to you, this deal between OpenAI and AMD, what does this mean for the broader AI development conversation?
Yes, so we think that, we can at least say that the demand is quite strong, and even after seeing several years of the AI demand boom. And going forward, AMD now expects that maybe the deal could generate additional $100 billion US dollars revenue for the AI GPU business, and the company is maybe trying to achieve around maybe $7 billion US dollars revenue from the AI GPU for this year based on the consensus. And the number is still quite small, but maybe next year the number could go up, and the consensus basis maybe around $10 billion US dollars for the AI GPU. And probably on the consensus basis, probably over the next 4 or 5 years, $70 billion US dollars was the previous maybe consensus for the AI GPU, but now the company expects additional $100 billion US dollars could be possible. So maybe we think that AI demand should continue to be quite strong, and we think that there should be many things to do in terms of the AI development, and we are still working on the many manual work. So we think that still we should see the quite strong AI demand going forward.
What does this mean for the overall tech sector? Because we've been talking about how much the pie as a whole is expanding here for the AI server market, maybe $1 trillion by the end of the decade. What does it mean for other chips, for equipment in turn?
Yes, and when it comes to AI calculation, we need, of course, GPU and made by NVIDIA or AMD, but we also need a high bandwidth memory, which is a high performance DRAM. And when it comes to AMD's GPU, there may be more chance for Samsung Electronics to supply the HBM chips. And when it comes to NVIDIA, so far SK Hynix or maybe Micron, they were the major supplier for the most advanced GPU. But when it comes to AMD, Samsung may have more chance. So in that sense, we could see a bit healthier competition among the suppliers for the HBM as well as GPU. So I think that this kind of healthy competition should be quite good for the when we think about AI industry development. So in that case, probably going forward, the chip making equipment makers will work on quite several companies, including Samsung, SK Hynix, and also Micron, of course, in addition to TSMC.
Yeah, what about the situation in Japan? Because we were just talking with Abhishek Vishnoy there from the equities team, saying that the AI story has been a little bit underappreciated so far in Tokyo, on the Tokyo market. Do you see that shifting at all? Japan's more of the equipment, as you said, the materials play. Are there any names that stand out?
Of course, we have quite many equipment companies, and the largest market share is now owned by ASML or sometimes Applied Materials. But we have Tokyo Electron, or maybe we think about testers, advanced tester could be the major suppliers. And Screen Holdings has the largest, large market share for the cleaner equipment. And when it comes to the photomask equipment, Lasertech could be the supplier. And when it comes to materials, we have, Eviden or, some other suppliers. So in that case, we think that going forward, some companies could also benefit from this, kind of the market expansion of AI.
Yeah, and indeed, I'm just looking at the biggest movers in Asia today in Advantest and Tokyo Electron are some of the standouts. But that was our Bloomberg Intelligence senior analyst there, Masahiro Wakasugi in Tokyo. And if you're a subscriber and if you want to rewatch that interview, you can via our interactive TV function, TV Go. You can also become part of the conversation by sending us instant messages, so do check it out at TV Go. We'll have plenty more ahead. This is Bloomberg.
All right, welcome back. Just a look at gold, which continues to hit record after record on a daily basis. Goldman Sachs out with a new forecast. December next year, 4,900, which effectively is 28%, give or take, from the current levels. And we're already on track, by the way, for the best year since 1979. Smashing Pumpkins, by the way, are in town.
Welcome back to the China Show. Look, this is not the beauty shot we take usually at the top of the 10-hour today, but
that?
You are. You're seeing the beautiful Sydney Harbour.
Oh, that is right, yes.
Yeah,
I'm
come
sorry.
on, Dave.
To the point you're making, we're not used to seeing
We're not used to seeing it.
Especially this angle, too.
Yeah, that is, I haven't seen that angle before. But the point is that we're seeing that, of course, because there's a lot of markets that are shut today. Greater China, so mainland plus Hong Kong, Korea as well for holidays. But what is trading in the session today, you can see a very clear theme here because Australia's sort of standing out to the downside. But you've got the Nikkei and Taiwan also heading higher. Taiwan really leading the charge. So this is really the tech story, Dave.
It really is, and I think that's really showed up in, when you look at factor investing, and shout out, of course, our markets producer, Anthony Stephens, for just giving us a heads up as far as this is concerned, right? So here's the plug, FTW, that's coming up on your screens. That's the function you run. And effectively what you get on the terminal is you look at the big winners from overnight, or in this case, over the past week. It's really momentum, excuse me, that's in many ways, excuse me, dominated market returns, right? So within momentum, that's mostly tech and AI. You do get some constituents there as far as biotech. PopMart, for example, is doing very well as far as momentum goes. And you have some of these names also obviously in growth because they also tend to be large in market cap size. So these are effectively some of the, the trades that have done very well. I actually need some waters, but yes, thank you so much. Okay, as we get that water, speaking of liquidity, let's please have a look at momentum specifically behind the Philly Semiconductor Index, which, of course, the big story overnight was a 20+% move in AMD, 190 points to the upside on the SOX index, which effectively now puts this massive run from Liberation Day on a 14-week RSI basis down effectively at the highest levels on record. If you look back over the last, it's called 15 years or so, the sort of new paradigm that we're in as far as the AI and semiconductor space is concerned. Now, valuations, I mean, when you hear we're reaching fairly lofty and extreme levels on PE itself, you compared it historically, but of course back then there was no re-rating as far as the longer-term AI runway was concerned. But on the number itself, right, we're approaching 30 times on forward PE, which effectively puts us very near. In fact, we're closer to 3 standard deviations than we are to 2 on forward PE. Now, has that been a concern? It has been a concern. Has that stopped the rally? No, is the question. Short term, no.
Yeah, that's right. I mean, are we in sort of a bubble right now is one of the key questions. But certainly overnight you saw that rally extending. And the latest thing to inject optimism into it is AMD inking this major deal with OpenAI. So you're looking at deploying 6 gigawatts of AI chips over multiple years. We had an interview actually with the AMD CEO, Lisa Su. She spoke to us about this, saying how it's mutually beneficial. There is that big question from the OpenAI side as well, how they're planning to finance these major investments they're making into chips from the likes of AMD, but also NVIDIA. But the OpenAI president, Greg Brockman, was also in this interview speaking to us about the partnership and how, as well, the company plans to fund their massive projects. Take a listen.
You can really see that we're very much in the, we just want compute, as much compute as possible. We think this is important for the economy. We think this is important for the nation. We think this is important for humanity. And so really we're working with everyone in this whole industry in order to get as much compute power online as quickly as we can.
Lisa, I'm sorry, specifics. Where is this data center going to be? Is it one single site? Is it Oracle that will partner with you on this?
Well, actually, what this really is an announcement of what AMD and OpenAI are going to do together. OpenAI has a lot of partners in terms of where they deploy. I imagine a lot of it will be in cloud service providers. It's really up to OpenAI and Greg and Sam and the team. But the way to think about it is for this amount of compute, it's going to have to be in a lot of different places. I mean, it's a massive amount.
Multiple locations.
Multiple locations. Right? I would imagine, multiple providers to really get this online as fast as possible.
Greg, there is a lot of focus on where OpenAI is going to get the money from to fund all of this. Sam Altman's big picture commitment is well documented, right? And the numbers, to his mind, are in the trillions. But have you specifically thought about debt financing for this relationship with AMD? Have you thought about doing a specific equity raise? You are very committed across multiple projects.
Yeah, look, the way that I would look at this is that AI revenue is growing faster than I think almost any product in history. And that ultimately, at the end of the day, the reason this compute power is so important, is so worthwhile for everyone to build, is because the revenue ultimately will be there. Now, as a company that is trying to move as fast as we can, we look at everything, right? We look at equity, debt, we look at trying to find creative ways of financing all of this. That's been actually a huge focus of us for the past couple of years, is thinking about how can we possibly build the amount of compute that is required in order to really transform this whole economy into an AI-powered economy. And so I think you'll see lots of creative ideas, but fundamentally, I think at the end of the day, it is because we believe that
I'm sorry to jump in and interrupt, and Kato, just forgive me on this one. The condition of AMD issuing the stock to OpenAI requires you to spend money, basically, because you have to deliver that gigawatt of capacity first. Lisa, I have to ask you if you have assurances that OpenAI is good for it.
Well, let me be clear. I mean, this deal is a win for AMD, it's a win for OpenAI, and it's a win for our shareholders. And that's kind of the way we put this together. I have full confidence in, OpenAI, Sam, Greg, Sarah. I mean, this is a massive opportunity for us. Right now, right here, it's about who has the most compute and how fast can we get it online. And we're committing to doing this together.
That was the AMD CEO, Lisa Su, the OpenAI president, Greg Brockman, of course, with their colleague Ed Ludlow on massive move up overnight. Kyle Rodda is with a senior market analyst at Capital.com. Kyle, good morning, and thanks for joining. Good morning from Hong Kong. I realize, of course, you're in Oz right now. I mean, talk to us. I mean, every time the chart seems to suggest we're likely going to see a pullback in U.S. equities, it just goes the opposite way. How do I need to be looking at this rally right now? Do I lean into momentum even further?
Well, I mean, taking your point earlier about sort of the momentum factor at the moment, almost everything is pretty much a momentum play right now, and it's so sentiment driven. I obviously don't have to sort of give you the numbers here about, how expensive stocks are at the moment, especially when you look at sort of things on a forward price to earnings basis. But the way that I've been explaining it to clients is that, there's lots of questions coming my way about, is this, a bubble, or is there a crash coming around the corner? There's always obviously those fears. It's almost a kind of universal question in the markets at any time. But, fundamentally, yes, we're incredibly frothy. There's a lot of big assumptions being baked into the market now that is kind of supporting valuations at these levels. But even still, this is a momentum-driven market and what I would describe as a buy-the-break market, which is to say that, like last night, when we see the market pushing to new highs, you see that as a bullish signal. Flow is going into stocks. The pie in the sky or blue sky ambitions when it comes to AI and the likes are pretty much, being priced in, and it's a cliche thrown around too frequently, but we're priced to perfection. So like we have been for the last few months, we're a market that is very prone to shocks right now because of where valuations are, but nevertheless momentum is very strong, and you can go broke obviously very quickly trying to short the rally here.
So that means earnings is going to be really pivotal and a pivotal test for the market. What happens if we don't see any ROI on all of this spending on AI? Is the market still going to be patient, or can we expect a pullback?
Well, I think there's sort of two things kind of embedded in that question there, which is, the sort of short-term earnings picture, and that really comes down to the question of monetization by the big hyperscalers and whether they can continue to outperform in terms of earnings growth. And, the way that I kind of almost see it is like a pole vaulter, exceeding record highs with every jump. An impossible bar being set for the jumper, but constantly being exceeded. For example, last quarter's earnings growth from Mag 7's companies was almost 30%, exceeding a bar of about 15% going into that earnings period, which is quite extraordinary. If these companies don't meet those earnings expectations going forward, there is going to be that potential correction, and will have to be to reflect a weaker earnings outlook. The bigger question, though, is what you just touched on, is the kind of broader return on investment on artificial intelligence as a technology, and whether what we're seeing right now is a lot of capital being allocated into something that is going to create excess capacity and effectively a lot of misallocated resources. If that happens to occur, and that's because effectively artificial intelligence proves to be a hype, then that's catastrophic for the market. However, that's a bigger story, a bigger picture story, and one that we're probably not going to confront this earnings season, for example.
Yeah, Kyle, I'm not sure if you follow athletics. You mentioned the pole vault event. Mondo Duplantis, of course, the world record holder, almost does it incrementally, almost 0.1 at a time. And sort of the reason I bring that, him pushing the boundaries ever so slightly even further, is, do you think when I look at markets right now, and people talk about don't look at the short term in AI, look at the longer term, look at the runway, how useful is it to use these current market metrics of PE, 30 times earnings? Do these matter right now as an indicator of expensive valuations, expensive stocks or not?
Well, it is that age-old question of whether this time is different. And maybe it is different this time. And I think fundamentally, if you do think that artificial intelligence is going to be world-changing, what you're actually, I believe, saying is that effectively these LLMs will get to a point that they displace human labour to the point that productivity absolutely booms. Profits are almost unlimited, and as a result, these kind of multiples no longer sort of reflect the same world that we used to live in, and when they were once obviously a valuable tool to sort of assess the fair value of something. The big if is whether we do start to see that evidenced in the data and evidenced in the real economy, where AI is truly displacing human labour and is leading to this kind of productivity boom. This comes outside of my kind of circle of competence by some way, but at this point in time, most of these LLMs aren't delivering, kind of novel thought. Some of them are in the pipe works, obviously delivering kind of novel thought that could, genuinely displace human labour. But at the moment, it really is kind of a very good guessing machine and a very powerful search engine, which, if nothing else can provide at least a very easy way to consume things and make life a little bit easier, but may not be world changing. So it really does depend on whether basically the AI hype is met, if we do see it materialise. If it doesn't, then this time isn't different and things have to correct to reflect maybe harsh realities.
Yeah, I guess so. You've still got that race toward AGI, or artificial general intelligence, where maybe you'd have better capabilities than the human mind. But leaving that to the side for now, what about the market moves that we're seeing around gold in particular? We just had Goldman Sachs, for instance, raising their December 2026 forecast to $4,900 an ounce. How long do you see that playing out, and what's it expressing as well to you?
For me, it's expressing basically the expectation that governments around the world are going to run economies incredibly hot into next year. And one of the reasons, and I think the Japanese situation was very illustrative, that governments want to do this is, one, there's kind of a mandate now from the public to effectively ensure full employment at all times and much higher economic welfare than, say, we saw in the 2010s, and that kind of what you could call that kind of secular stagnation period. But the other part of it, and this is crucial too and is tied into the AI trade, is the strategic competition that is emerging, that is forcing governments to try and reshore a lot of industry, ensure a level of independence and a protection of national interests, both, again, from economic purposes, but also military and strategic and competition purposes. And this is a kind of very precarious dynamic, because it means there's a lot of public money, a lot of deficit spending that's going to be pumped into economies in the United States, as we've seen in Japan, maybe to an extent as well, depending on how things evolve in Europe over the next few months. In Europe too, the German sort of re-leveraging, public re-leveraging is the example there. Gold is effectively suggesting that nominal growth is going to be extraordinarily strong going forward, and that investors, wary of the value of government debt, are allocating more to gold as a safe haven, or at least as a store of value. So that's the dynamic we're seeing. And again, until we sort of see that kind of breakdown, this sort of new era of economic statecraft where governments are focused on reshoring manufacturing and defending their strategic interests, I think gold in the long run just continues to rise.
Kyle, thank you so much, sir, for all of that. It's Kyle Rodda there, senior market analyst at Capital.com. I mean, just the two market themes of the day dominated that for good reason, gold and also AI. Okay, just some lines coming through, and let me just reorganize my screens here so I can get to both for you guys. Let me start things off with a line coming through. This concerns Taiwan, and the president here, effectively saying that he hopes for continued Trump support to deter China, and of course separately, and I believe this might be also part of the lines coming through, is that Taiwan supports TSMC to invest in the U.S., Japan, and also Germany. I won't extrapolate beyond that. That's the headline we're seeing so far. Separately, we're also hearing from China's Ministry of Foreign Affairs that China's Premier Li Qiang will be visiting North Korea. And I believe we also have some dates now being attached to that. Let me just look at my limited number of screens. And I think the dates there are October, bear with me. I think it's October 11 or 13. I'll correct myself. Anyway, okay, let me just make sure of that before I get to that a bit later on. Okay, let's tell you what else is coming up here, Bill.
Yeah, we're going to be actually looking at Japan's growing investments in defence startups as the public becomes increasingly worried about potential regional threats. Plus, we'll take a look at the mass of disinformation or misinformation being generated around Japan's incoming leader, Takaichi. We'll have plenty more ahead. This is Bloomberg.
Welcome back. Almost right on cue with the yen topping 150. We're getting some commentary coming through here out of Mr. Kato talking about how obviously it's key for FX to move stably, reflecting fundamentals. Also, other key things that are closely watching for any excessive moves in the FX markets. Are those initial signs of verbal intervention? That's a question mark, of course. Now, I think a chart's coming up on your screens very shortly, and this is we're going to give a shout out to Michael Wilson, of course, out of our FX team, for effectively helping us understand what are the levels to watch as we've broken above 150. And I think one specific level, and I'm going to bring Michael in a moment here to talk us through this August 1 high of just above 150, which if we close above that might confirm this bullish uptrend we're seeing. We're right in the middle of that as far as this pair is concerned. Michael Wilson joins us right now, our FX and rates reporter out of Sydney. Michael, yes, so that's the headline for you. help us understand and make sense of all these lines on the chart beside me here.
Sure. Okay, well, yeah, so it's proceeding nicely up inside that channel, and that's all very good. But, if you look at that, that's actually a weekly yen chart, and it's through the eyes of a Ichimoku cloud. So if you look at along the top of that cloud, the lead line there, it's a lot of previous calendar highs around that 150.90 to 150.120, 25 level. And I think that's probably the true level. There was a lot of talk going into this, Monday morning, people were obviously scrambling and looking for a level to fade it, with Fed coming up and everything like that. So they wanted to fade the move, but, some have got in and got out, because the move kept going. I think the yen fell 2% yesterday. So as we approached that level, but there was genuine stalling. We saw Honda come out and Takaichi's advisor and say that, yen above 150 wasn't desirable, and I can say that with the benefit of hindsight. Kato's just come out and said, a little bit of jawboning as well. So, it's obviously going to be a bit of a problem, and it's going to suit that narrative where I do think there might be genuine resistance around that 151 level, and that's illustrated in that chart line there. So while we are proceeding up in that channel, that bullish channel, I do think that we're going to do some hard lifting to close above that 151.30 area, and if we fail to, if it's rejected, that's interesting in and of itself, because we're heading into, obviously, BOJ end of the month, but there's also an APEC summit. So you've got a couple of macro drivers there. If dollar yen was, say, around that 151 level, Ministry of Finance would be under the pump to probably push that a little bit lower, because it would be a very awkward conversation on the sidelines of that APEC summit between the US and Japan as to the yen weakness, how it's reacted maybe on a bit of a liquidity squeeze and all that, and that's fine. But it's actually held a level, so that will become problematic closer to the end of the month. As to the the Bank of Japan itself, I think that the market is obviously looking for a reason to jump back in and buy the yen, but I think they're not going to have much opportunity for any sort of true hawkish commentary out of the central bank.
So, Michael, OK, we've had the Ichimoku cloud. We can also move to a stochastic slow chart as well and take a look at what's happening in the Kiwi dollar right now. So what can you tell us?
Well, Kiwi's actually just staged its own mini recovery before RBNZ tomorrow, and it's doing rather well. But look, all bets are off come this time tomorrow, because there's talk. Every bit of data that's come out of late, it's either 25 or 50. Is it a dovish 25 basis point cut, which will probably cause a bit of a mini squeeze to the top of that channel, where it would only ever get resold anyway. The narrative from the strategists and or the economists is that they should probably go 50, rather than just to try and turn the ship around a little bit. There was a business opinion survey out today which was soft, and if they're trying to actually fire up the economy, get some green shoots going, well, they're probably going to have to go 50 earlier and front load that stimulus. Otherwise, this is going to be like death by 1,000 cuts. And technically speaking, if we close below that 57, 54 low a couple of weeks ago, that's very, very signal. It's quite a gap. So we could see probably a 56 handle easily next week if they don't. Even if they were to go 25, and without sound reasoning why, I can't see how they could come up with three things that would make you seem bullish on the Kiwi at the moment. But if they were to, you'd probably only just get a squeeze, and the market would resell it, because the market sometimes is inclined to reward a proactive central bank. And if they see 50 up front, Kiwi might go down first, but then you might see a bit of short covering and it'll consolidate. But if they see that there's no real determinant to stimulate the economy, they'll just keep piling on those shorts, and that 57.50 will be on the radar for a while. So even though it is a bullish channel, it's vulnerable at best.
Michael, really great to have your insights this morning. That was our FX and rates reporter, Michael Wilson, there in Sydney. And remember, of course, terminal subscribers can interact with the charts we show using GTV Go. Browse recent charts featured on Bloomberg TV to catch up on key analysis and save those charts for future reference. We'll have plenty more ahead. This is Bloomberg. Just some lines crossing the terminal here. Hearing from the incoming Japanese leader, Sanae Takaichi, this morning, talking about the plans to work with Trump. She's saying that they want to have a free, open Indo-Pacific region. It does seem like maybe the Trump administration is looking at making a stop in Tokyo later in the month. This would be, of course, really an important and very early test for Takaichi as well about how she plans to manage that relationship with Washington moving forward. But that's what we're hearing so far.
Yeah, because so far the focus has really been on the domestic agenda, the economy, what it means for fiscal spending. This might give us an initial clue as it pertains to the foreign policy stance there. Lots more on Japan coming through in the next segment here. Before we get to that, just very briefly, we were talking about gold a lot in the last hour or so. So Goldman's upped its target to 4,900. Standard Chartered, by the way, is coming up in the next hour. Bloomberg Television. Suki Cooper will be talking us through, of course, their new take on gold. As you can see, gold and crypto plays specifically are also doing very, very well today as we inch ever closer to that 4,000 level. I don't think I mentioned the 4,900 target now of Goldman Sachs. Sorry about that, without the specifics. More on that in a moment. Plus, of course, this deep dive into Japan.
It's 11:29 a.m. in Tokyo this morning. Japanese markets are just about to go into their lunch break, but not before we haven't been getting really a flurry of updates, because there's been a presser going on at the LDP HQ, and we're getting some lines crossing, including from Takaichi, who's talking about plans to work with Trump. She wants a free, open Indo-Pacific region. We're also hearing from Shinichi Suzuki as well, who could be taking a really key post in the new administration as well. But he's saying that the trust between the LDP, Komeito is firm. They've had an ongoing or an existing coalition with that political party as well. So that's what he's saying about that. He's also talking about essentially you need to have investment in Japan. You can't achieve growth without that. But still, at the same time, you do need to value fiscal discipline, and that can't be ignored as well.
Don't throw it out the window. So I think those are two very important points, because they're coming at a time when, I guess, to some extent, markets are questioning to what extent we can sort of stretch those concepts, both on is it going to be with the Komeito party, number one, and number two, is it going to be a lot more juice in this economy as far as fiscal push is concerned. And just on the sort of surface value of those two statements, it doesn't seem to be something that we should be too liberal with. Just to borrow a pun there. Go ahead, Belle.
No, I just need to make a correction there. So we said that LDP presser is ongoing at the LDP HQ. I mentioned that Takaichi line about plans to work with Trump to have an open Indo-Pacific region. That actually was from an X post, or a post on the social media platform X. But she's essentially saying very pleased to receive such a warm words rather of congratulations from Donald Trump, and she's hoping to work toward him as well, or with him rather, on their alliance and make it even stronger and more prosperous. So that's in response to an earlier post on X from President Trump there.
Yeah, and that's ahead, of course, of the likely trip coming up, of course.
Yeah, that's right. Yeah, possibly looking to make a stop, President Trump, in Tokyo later this month. But let's get more on what we're hearing so far about Takaichi coming in, possibly going to be the first female leader in Japan, years ahead of the US as well. But let's bring in our opinion columnist, Garode Reedy, who thinks Japan's incoming leader is generating buzz and misinformation in equal measure. So Garode, it was a really great piece from you, just sort of laying out some of the key areas we're hearing around gender equality, her fiscal discipline, or a stance on fiscal spending. What is standing out to you so far about that buzz, but also that misinformation?
Well, certainly, there's a lot of buzz in the markets. I think a lot of people found themselves a little bit mispositioned, a little bit too confident that Koizumi was going to win the election. So now you're seeing a real backlash to that in the markets. I kind of feel a little bit of the Abenomics 2.0 froth is a little bit too much. Takaichi is going to have a far more constrained position than Shinzo Abe had when he came in as leader. He had a huge majority and a huge mandate to get things done. Takaichi has a much weaker position in the party. She has a much weaker position in parliament, and she's going to have to do a lot of very practical things before she has any big free spending plans that she's able to get through parliament. So I would dial back the hype on that front just a little bit before anyone gets too excited that we're going back to the Abe era fun times. In terms of the misinformation, I do think a lot of people have been a little bit sort of like wrong-footed about what they knew about Takaichi or how much they knew about her. There's a lot of stuff going around that casts her as a very radical, ultra-conservative figure. I think that also goes a little bit too far, and I think people should pay a little bit more attention to what she says and the policies that she's outlining. We're going to get a clearer idea of that, I think, in the coming weeks, presuming she gets confirmed as Prime Minister next week. So pay more attention to that, I think, than anything you might see online.
Well, that then begs the opposite question here, Kirill. What's the likelihood of nothing changing?
I mean, nothing. There's not a big chance of nothing changing, shall we say. Obviously, Takaichi comes from a very different side of the LDP to Ishiba, who's very much on the left wing of the LDP. Takaichi certainly is, a very conservative choice. They have very different views on many kinds of things, including spending. However, the first thing Takaichi is going to have to do is going to have to be very practical policies. She has to rebuild support for the LDP within the country. Voters are really annoyed. They're upset with the LDP. They're upset with inflation. The first thing she's going to have to do before we get to any, big spending, before we get to any, change in foreign policy, she's going to have to figure out a way to get voters on board. That means putting cash in their wallets. I think that's going to consume at least the first couple of months of her term as she tries to compile an extra budget in order to do something, do anything in order to alleviate voters' concerns about inflation.
Garud, one final question for you. Foreign policy, what can we extrapolate? What's not noisier? What's real?
In terms of foreign policy, you can very much expect, I would say, a continuation of Abe's thoughts on, a strong Japan that sits, side by side as a more equal partner with the U.S., and one that, is a strong presence with the U.S. in Japan. She will very much try to, I think, emulate the relationship that Abe had with Donald Trump and maybe try to exploit the fact that they both were close to Abe. Of course, the big risk is that China and South Korea relations, with both of those countries improves a lot under first Fumio Kishida and then Ishiba. They are already looking at her very skeptically, and it depends what kind of position she takes. Does she, for example, visit Yasukuni Shrine? That could be a big potential flashpoint in the months ahead. Having said that, she has moderated her stance this time. When she ran for election last year, she very outright said that she would continue to visit Yasukuni Shrine as Prime Minister. She has essentially dodged that question every time she's been asked it this time around. So she's clearly being a little bit more pragmatic this time around. That has gotten her into top job in the LDP. And I think we can assume that, surrounding her, she also has, she has a lot of debts to pay, shall we say. She has debts to pay to the likes of Taro Aso, who helped elevate her into this position. And we can expect, or at least I expect, that she will be, in the short term, she will try to be more pragmatic and try to avoid any potential flashpoints from which there's very little for her to gain in the near term.
Garrod, thank you so much. Garrod Reedy there in Tokyo for us, our Bloomberg opinion columnist on everything, including into foreign policy and what this really means for what is largely still perceived as a pacifist Japan. We're looking at defense-related stocks because that sector has been very much in focus amidst this pickup in spending, changing in mindsets, certainly with tensions with mainland China. You have North Korea, you have Russia. Let's bring in a politics and security reporter, Alistair Gale, for more on this. And Alistair, I mean, the title, the headline is Pacifist Japan is boosting its spending on defense startups. And what has changed in a country that's traditionally been fairly risk-averse when it comes to that spectrum of corporate Japan?
That's right. I mean, a lot is changing right now. As you say, you know, there are threats from around the region that Japan worries about: China, North Korea, and even Russia to Japan's north. I mean, really, over the last 5 years, you've seen a sort of shift in thinking about what Japan should do to deal with that. Obviously, in the background, as well as Russia's invasion of Ukraine, which made people worry about a larger power trying to take over a smaller power, and could that manifest itself in Asia as well, perhaps over Taiwan. So Japan has sort of come around to the idea that you've just got to boost defense spending, and you've got to boost the defense sector, which historically has been quite small in Japan. You only have a handful of large companies which provide equipment to the Japanese military, the self-defense forces as it's known. And it's been relatively small compared to other major countries, even compared to South Korea next door. So what the government is trying to do is encourage the growth of that sector. And one part of that puzzle is bringing in smaller businesses, startups who have innovative ideas about defense technology, you know, think areas like drones, AI, that kind of, you know, new cutting-edge technology. Often that's brought into the defense sector by these kind of smaller, creative, more kind of scrappy businesses. And that is also a cultural change for Japan. It doesn't have a large entrepreneurial sector. That is changing, but it's coming from a small base. So what's happening here now is the government's trying to sort of promote the growth of those companies, is offering finance for them. It's saying, you know, we want to incorporate you into our defense sector. You are important to us. And we're also seeing younger Japanese who are more worried about the regional security picture, wanting to contribute to that and breaking through what's really been a historical taboo about being in the defense business here. So a lot is changing. It's starting from a small scale, but we're starting to see entrepreneurs and people who want to contribute to defending Japan from what they see as the rising threats, coming up with new ideas, and that will, over time, perhaps lead to a more robust, more kind of filled out Japanese defense sector.
Yeah, I feel like you've sort of really gone through, I guess, what the contribution can be, in the sense that startups can be a little bit more agile and they can contribute that innovation maybe you don't get from the industry behemoths. But what are the challenges then to the success of startups in the country as well, given this has been sort of an underinvested area?
Well, one of the challenges is money, of course. You know, attracting capital into startups is a challenge here in Japan. It is the VC sector is growing, but there is some reluctance to invest in the defense business. So Japanese companies, you know, have a problem. These startups have access to capital. The government is trying to contribute to that by being really a matchmaker for these companies to find investors. They're more Japanese companies are going to sort of global events to try and raise their profile, to try and attract investors. So money is a big part of this. Obviously, a lot of this technology is very cutting edge. It may not work. You may be looking at something that you spend a lot of time and effort into, but essentially, you know, comes to nothing. So there's the risk side of things, which, you know, Japan doesn't have. You know, that kind of culture. Of course, there's been, you know, big risk takers in Japanese business in the past. Think of like companies like Sony and Toyota. But in recent years, the kind of entrepreneurial spirit has perhaps been less in the forefront. So it's trying to sort of move back into that kind of more risk-on type approach to doing business. But of course, that the upshot of that may be that you may end up with nothing. So there's various factors that are challenges for the business of defense here.
What about the challenge of also your export markets? There are a range of restrictions in place, including on exports of lethal military equipment, for example. How do they overcome that? And I guess for certain types of technologies, you mentioned drones, for instance, there's always surveillance or reconnaissance. But what does that mean then for, I guess, their growth, these startups?
That's right. I mean, there are still restrictions on exports, as you mentioned. Japan has gradually kind of loosened those restrictions. In 2014, there was still a complete ban on defense exports. That's been lifted, but there's still a general ban on anything which is considered to be lethal weaponry. So think things like missiles, even suicide drones. So those kind of things, it's hard to get markets overseas for those because you still have to deal with the fact that those restrictions exist. The government is trying to find ways around that. We had a big deal recently here for Japan to sell warships to Australia. So it's making exceptions. It's trying to find ways to work around those restrictions. And I think, it's interesting now with Takaichi coming in as the head of the LDP. She's very forward-leaning on having a robust defense sector. We may see more momentum in rolling back those restrictions, particularly if we see some kind of change in the government with perhaps, more hawkish elements who have sort of more sway in the government see that, really now is the time for those restrictions to be lifted in total. But the challenges still remain. So it's a kind of case-by-case process. Businesses here talk about lots of paperwork that they have to do to get exports approved. But we are seeing some changes and it's becoming easier.
Yeah, and on that point, I mean, we just heard from Takaichi in the last few minutes in an ex-post saying she's committed to a free and open Indo-Pacific, but sometimes, of course, building up your weapons capabilities is a key aspect of deterrence as well. But that was Bloomberg's Alistair Gale there in Tokyo for us. And just ahead, sovereign wealth funds and global money managers are jumping into LG Electronics' India IPO. We'll have details of the anchor investors coming up. This is Bloomberg.
Welcome back. Just looking ahead, of course, to the cash market open in India. Big day there. And it's shaping up to be a big year for ECM. Futures are pointing to the upsides. The IPO market, we alluded to that just now. Of course, the proceeds this month are expected to cross a record $5 billion. You have the sovereign wealth funds, plural, of Abu Dhabi. You have Norway, Singapore have all become anchor investors. And, of course, the big name we're talking about today, which is the Indian unit of LG Electronics, will start trading and start taking orders from public investors later today. That's the operative word. It expects to list on the 14th of October.
Yeah, as you said, I mean, it's set to be a record month for Indian IPOs. So you're looking at proceeds maybe crossing $5 billion in October alone. But let's get more with our Asia equities reporter, Ashutosh Joshi, now joining us. So, Ashutosh, why are we seeing this frenzy right now with this huge amount of capital being raised, essentially?
Hi, thanks for having me on the show. India is set for a year of records, probably crossing last year's 21 billion funds raised via IPOs. What's driving a demand for new listings in India is funds coming from mostly institutional investors. There is demand for new listings which are seeing a strong participation from domestic as well as foreign investors. What's driving the demand from domestic investors is money coming via mutual funds, wherein retail investors participate big way. Companies have been able to raise funds at valuations perhaps much higher than some of the biggest markets in India. That allows investors such as private equity fund to exit their investments through a listing of companies. This is helping India's IPO market remain robust and has helped India become one of the busiest places again this year in terms of capital raising.
And I mean, certainly it helps that you have such a big listing coming. It helps that the market is not doing too badly. In terms of the brands behind this, though, do they help? Tata, LG, for example.
Tata, LG, both are big brands, and as expected, their anchor IPO portions were subscribed by global names. LG's anchor investors included some of world's biggest sovereign funds. Tata, we also saw strong participation from domestic mutual funds and insurer Life Insurance Corp of India, as well as funds managed by Goldman Sachs and Fidelity also participated. Anchor participation indicates that these IPOs are set for a strong demand. We already saw almost 40% of Tata Capital's IPO sold on first day itself. So investors are hopeful both IPOs raising more than $1 billion each will see strong demand.
When you've got so much IPO activity, though, what happens to market liquidity? Has there been any sort of impact on that?
Yes. Secondary market in India is undergoing a sort of rare patch of lean performance. India's benchmark Nifty index has trailed its Asian peers by its biggest margin in more than almost 30 years. This comes on back of a strong performance of some of the peers like China and Korea. However, despite this, Indian equities are on course for their 10th straight year of positive returns. That is a feat not achieved by many of emerging markets ever. However, there is a case for some sort of impact on secondary market performance because a lot of liquidity is absorbed for the new IPOs or new listings coming. Hence, for rest of the year, we may see some weakness in secondary market.
Right. On that fairly positive tone, it's banter, of course. Ashutosh Joshi there in Mumbai for us. Our Asia Equities Report, a big one, of course, coming through in the next week or so. Mark your calendars now. October 14th. Right, coming up here on Bloomberg Television, in fact, just on this very topic, this booming IPO pipeline in India, the Bombay Stock Exchange, CEO joins Hassanullah Amin, exclusively, of course, on Insight. Plus, we'll get his outlook on the derivatives and options markets there as well. Right, welcome back. So day two in Japan is not as strong. Taiwan, the reopening today, said it's playing a bit of catch-up. Of course, the AI and chip play there. Odds going the opposite way. We are, of course, on the lunch break over in Japan. We're watching Europe very closely as we move into the trading session there on Tuesday. That blowout in yields, the weakness we're seeing in the currency. And really, we were supposed to be talking about a weaker dollar this week on the back of the shutdown, but Japan and then Europe happened. So hence we're trading at about these levels. Gold seems to be a story that keeps giving here.
Well, there's sort of three stories really for gold to track today. Firstly, you've seen the PBOC extending its gold buying spree for 11 straight months. That's one of the reasons we've been seeing so much momentum behind gold prices. Then you've got as well the story that Goldman Sachs has upgraded their price target year-end for 2026, but to $4,900 an ounce. And then lastly, we had an interview with Ken Griffin from Citadel as well.
Yeah, and that's one of the top-run stories as well on the Bloomberg terminal today.
Yeah, he's saying that essentially investors starting to view gold as a safer asset than the dollar, and that is a development that's really concerning to him, probably concerning to a lot of people out there.
All right, we will see you all tomorrow. That's it from us here on The China Show. Have a good Tuesday ahead.